and then I can grab the link. Right, okay, I think I know what I'm doing now. It's saying it's going live. So let's see. I think also I need to change the settings on Zoom to disable the waiting room. Right, okay, so it's now saying that I'm going live into the group. Right, so hello everybody, bear with me if you're watching the replay, jump forward 5 minutes to get rid of all this setup process. Right, I just need to grab links and stuff. So I need that link, copy, paste, and then I can copy and paste this into the groups. All right, so let's go in Ninja Forex. And of course that in there first. Paste. Wait for that to populate and then I can go, yay. Can get rid of that bit. Pull that up there. Just on the video, darling.
Oh, I've got my actual phone, but I don't know the password to get into it.
I don't know, whatever Noah set it up as. Ask him what he set it up as.
I don't know, he won't know.
Don't press loads of buttons because you'll disable it. That's what happened before, wasn't it?
No, don't worry, I know what to do with it.
All right, just a minute, darling. I'm just in the middle of something. Right, okay. Financial Freedom Group. I need to copy and paste that in there. So where's my notes gone? Notes. Copy. And paste. And post. So that's that one. So that's in the Ninja group. It's in the free group. So I then need to post that into my group. Rick McKenzie, Mr. Support Resistance. How are we today?
Good, yourself?
Yeah, good. Just getting set up. I think I'm posting this in all the right groups. I just need to post it in Discord so that everyone can jump on. Right, okay. Bear with me. Do a gallery view. Right, groups. So there's my link. Where has it gone?
Hello.
Hello, hello, hello. Right. Just, I've lost all track of what I'm going to do. Hang on a sec. Right. Groups, where are they?
Mama, I have to wait till Noah's 10 so I can have my own phone.
Oh, okay.
This phone, because we can't do the password, and then we just do any numbers to get onto the phone.
Okay, John. I'll be with you in a little while, okay? Go on, something to do for a minute. It's a good girl.
I might just stay on my phone.
Okay. Right. Where's it got to go? Live trading sessions. It's got to go in there, isn't it? Paste.
Afternoon.
Afternoon. Hello. Right. I think I've posted it everywhere I need to post it. I don't know. I was explaining earlier, right? Our water mains burst in our house on Bank Holiday Monday, and it was a nightmare, and we've had to dig a whole new trench out the front to put a new water main in. That was all good. We've done all that, put the new main in, and we filled in the trench at the weekend. Well, today it's absolutely chucked it down with rain, so that trench has kind of it collapsed. My husband's van was on the driveway last night, and his van's gone down the trench, so it's like a scene out of Earthquake. He's like gone down this big trench. So we've just had all the neighbours trying to pull him out, and then an oil van pulled up to deliver oil next door, so he's got involved and he's pulling him out, and I'm watching him on the CCTV, and they're just like rolling around in wet mud. It's like watching Peppa Pig. It's amazing. Right, hang on just a second. Shut this door. Right.
I thought you was having a new driveway done.
Oh, that was the plan before the water main burst, and we thought, well, what a good time, because we hadn't even finished the driveway, so it didn't matter that we had to destroy the driveway in the process. Go, children! No, don't call anyone. Oh, God. Right. Hello, Hayley. Do you know what? I might have a tantrum before I've even started the trading today. It's just like, oh, my house has gone crazy. Right. Anyway, we are here to look at the amazing BYOB strategy, which we all love. So let me just make sure everyone's there. Yes. Okay. Right. I think I'm going live everywhere. So people can jump on as and when. Right. Okay. And I just need to drink. Henry's on. Hello, Steve. Hello, Keith. Hello, Henry Dean. Right, hopefully Sharon's finished because I didn't want to cut into her session because I know we kind of butt up against each other that way, but it's all good. Right, I think people are jumping on. Right, okay, so if you haven't seen this before, if you're new, if you're in the free trial group, welcome. I am going to be going over the BYOB strategy in its very basic form. BYOB stands for Be Your Own Bank, and it's a strategy that one of the IML educators uses, and we kind of saw it, we loved it because of its simplicity, so we kind of use it to teach people how they can literally join pretty much straight away, start doing this strategy and start becoming profitable very quickly, which is why we love it. So, and I just want to do a massive shout out to Sean, Dean and Jules for that brilliant video, because they were doing the BYOB on the smaller time frames, the 5-minute charts, and they're having brilliant success with it. So it kind of just goes to show you that it's an incredibly versatile strategy. You can do it on the small time frames and just do really quick scalping, or you can even take it up to the bigger time frames and do exactly the same strategy on like your hours, your 4 hours and your day charts, and still get brilliant results from it. So it's the sort of strategy that's very versatile, depending on the lifestyle you lead, depending on what kind of thing you like to do, you can kind of pretty much put it on any timestamp. So I've always just done it on the 15-minute because it gives me time to really make sure that everything lines up, and it gives me time to get in. You do get a little bit more drawdown than if you were going in on the 5 minutes, like the boys are doing, but it suits me better. So, you know, you have to kind of play around with time frames and see what suits you better. So, right, I'm going to share screen and we're going to start off with the bare basics. Right, just share screen. Sharing. Right, let's get rid of that. Right, can everybody see the trading view screen?
Yeah.
Excellent. Good. Right. Oh God, while I'm on YouTube, get off of that. Let's go to AutoCAD. Boys like AutoCAD anyway, so we're going on that one. Right. So we have got a checklist within our Ninja team that we recommend everybody print off if they're going to do BYOB. That's the old one. And go through the checklist because it gives you, you know, make sure that you're literally getting into the trades because for all the right reasons. Now, let me just explain something to you. With the BYOB, because we're scalping, we do look at the news because the news affects our charts in big ways. So it's always very sensible before you start your day's trading to check the news to see if there's anything that could make your candles a little bit more move a little bit more volatile than normal, because the news can affect things in a great way. So we use a free website. It's called forexfactory.com, and you can just go and search for that on Google, and it gives you the news that's related to Forex markets, okay? And up here on this Forex Factory, you've got a little timestamp. If you click on that timestamp, you can set this calendar to your time zones, okay? So I've got saved as London, and I recommend you, anytime you go on this site, you refresh that because it won't refresh by itself. And then you click on calendar and it will give you your forecasted news that's going to be related to Forex markets for that week. Okay, so today is Tuesday. So we would go down to Tuesday, 28th. Now what it does is it tells you the currency pairs and it tells you next to it the coloured folder that's next to it. Now these colours relate to severity of news. So anything that's yellow flagged it's not going to affect the markets in a great way. It's not going to be like a massive difference in the markets. It's something that maybe would affect them a couple of pips, but nothing major. Anything orange flagged could have an effect on your chart. So be aware of it, okay? But don't panic about orange. It's the red ones you want to look out for. Anything that is red flagged will affect the markets. It will affect the way that the candles move around that time of day. And what this does is it gives you the time of day in your time zone to expect that news to come in. So 3 o'clock, which is now, US dollar of having their CB consumer confidence which would affect the market. So I tend not to touch the US dollar an hour before or an hour after that red flag news. Also, if you've got lots of yellow flags on the same pair around the same time, be aware of that as well, because that could add up to something a little bit more serious than just looking at a yellow flag. So at the moment, it's just really US dollar, because there's lots of US dollar there, and US dollar does control the majority of the way that the Forex markets move. So everybody kind of listens to the USD. So, you know, just be aware that there's something going on at the moment which might affect things. If it's a grey flag, it's normally a bank holiday. So like tomorrow, the Japanese are on bank holiday. So that you'd sort of expect the Japanese yen to be quite slow moving. Okay. So that's our news. So we've checked our news. So today we're going to be careful of the US dollar. Right, now, where do we get our signals from? Where do we get the ideas from? Where do we go and have a look? Well, IM Academy give us the tools to go and check out the markets, okay? Now, for this strategy, we do use the vibrator tool or the web analyzer. There are two versions of this. This is the old version. This was just called the web analyzer in my day. There is now a brand new one called the vibrator, which is kind of all white and all singing, all dancing. It's very beautiful. Because I've just always been used to this one, I tend to just go to the old school one. But I should really upgrade to the new one because it's probably got a lot more features on it. But this is the old web analyzer. Now, when you come onto this web analyzer, it'll ask you to select the strategy that you want to appear on your web analyzer. So down here, it's got strategy. Select strategy. Now, on this little drop down, you've got all of these strategies, all related to the vibrator. Now, I want the BYOB cash out, be your own bank cash out, okay? So I click on that. I want my cha-chings on because I like to hear when I get an alert that something's going on. And I've got mine automatically set to dark anyway. So you save your settings and reload your vibrator. Go. This all seems to be working this week. It was a little bit glitchy a couple of weeks ago, but it all seems to be good now. Now you hear that little cha-ching? That is the noise you would get when a brand new signal comes through. So look, it tells you the time passed. Literally just now we've had a Euro JPY signal come through on the 5 minute. Now, because I'm just going to be trading off the 15 minute and maybe the 5 minute, I'm going to untick the bigger time frames for now. So I only want the signals to come through on the small time frames. So this is telling me to look out for something that's about to happen in the Euro JPY. Now, this tool looks for volume bursts in the market, meaning that they have scanned the market, they've scanned the patterns, they know what's going on with this pair, and they're telling us that something's about to happen. Now, if you look at this to me looks very good. We have got an extreme stochastic. We are right down at the bottom of this, and that's on a 5 minute. So what I tend to do now is I tend to go and take this pattern onto my trading view. Now, this is trading view, and you can go to tradingview.com and set up a free account. You can trade off of a free account. It's not a problem. You don't need to upgrade unless you really want to put loads of alerts, loads of indicators and all that. But the simplicity of this strategy is that we are just keeping it really simple, and we just want you to use the free tools for now just to get used to this. And you know, if you want to upgrade in the future, then go for it. Now, this is the web trading view. Oh my god, this is trading view. Now, this is what's called a naked chart. There is nothing on this chart apart from the candles themselves. Okay, I haven't put any indicators on this at all because what I'm going to do is I'm going to put these on as we go and break it down for you. Now, that call was the Euro JPY. Now, in this section here, you have got your currency pairs. Now, if you click on symbol, it alphabeticalizes them so you can find your currency pairs really easy. And to add them, you just literally type them in up here. So when I started, I've added all my currency pairs in here, and they just save on there on your login. Okay, so you don't have to put these in every time you want to trade. So that vibrator told us to look at Euro JPY. Right, this is Euro JPY. Now, the red candles are sell candles, okay, or bear candles as they're also known. The green candles are buy candles or bull candles. So when these green candles are going up, that's in a buy. When they're coming down in the red, it's a sell. If they're going sideways like this is called consolidation, where the price is not sure what it's going to do. So at the moment, looking at the 15-minute chart, the Euro JPY is in a sell. Okay, it's coming down. So for us to take a trade on this, we need to put a few indicators on to decide what we're going to look at, and you know, if we think this is a good trade or not. Now, the first thing we're going to do is make sure that the candles that we are using are called Heikin-Ashi candles. Up here, you've got the choice of putting different candles in, okay? You've got your standard candles, line candles. We want to set this to Heikin-Ashi candles. Okay, these are the Japanese candles, and these candles measure the trend of the candle rather than the actual price of the candle. And that's what we want for this strategy. So the first thing you need to do is make sure you are on Heikin-Ashi candles, okay? I just like saying it. So Heikin-Ashi candles, right? That's the first thing we look at. Now, we're going to put an indicator on here. Now, what an indicator does is it gives you more information about how this trade is moving. So when you go up to your indicators list, you can search in your public library, or you can add it to your favorites. I've already added mine, but we're going to look for something called the stochastic. So if you start typing stochastic in, there we go, stochastic. And I've starred it. If you star next to the ones that you use the most, you can literally go straight into your favorites and add on your favorites each time, so you don't have to go searching for them. Now, as you can see here, it's dropped this little grid reference thing on the bottom here. It's got a purple zone, and it's got two lines running all the way through it like a snake, okay? Now, let me just move the chat box over there because it's in my way. Right. So, this purple zone is in between these two numbers, 20 and 80. This is all the defaults, okay? You don't have to go in and change anything on this. This is literally, you type in stochastic on TradingView and it will drop this on your chart, okay? Now, these lines, oh no, my husband's drilling. Oh my God. I'm so sorry, right? It's madness here. Right, that wasn't me, honestly, it's not.
Yeah, go on, pull the other one.
Oh, geez, right. As you can see, these lines kind of mirror the price that the candles are doing. So as they were going up, the candles were going up. As they were starting to come down, they were coming down. When the green line is on top of the red line, the buyers are in control of this trade. And as you can see, they're on top of the red. And what they've done is they've gone from the bottom and they've taken it up to the top. And if you compare that to the candles, you see, they've turned and they've taken it up, okay? Now, when they've got to the top here, the red line has crossed over the green line, meaning that the sellers are taking back control of this trade. This trade has gone above 80. It's gone into what we call the extreme because it's gone out of the purple zone, which tells us that this at this point is overbought, which means it wants to sell. Okay, so the red line has crossed over, and what they've done is they've bought it back down. Right, and now we've got a horizontal move going this way, consolidating. I'll tell you what, all the traders that are on here will understand my pain right now with all this going on, right? So we've got a bit of consolidation here because it's kind of just staying in the middle of this purple zone. But look what's happened here. Something's happened where the sellers have gone, no. I'm taking this down. I'm not messing about anymore. I'm taking it down. They've crossed over the green and they've brought it down to the extreme under the 20. So they come out of the purple zone and they are now in the extreme. They are now oversold on this trade on the 15-minute chart. So this is our first indication we look for when we are going to trade the BYOB. The first thing we look for is obviously the news is the first thing we look for. Then when we look at our chart, we look to see if these stochastic lines are in the extreme. And yes, they are. They are underneath the purple zone, which means that they are going to want to come back up again. Okay, this is an indicator they'll go up and down. It will move through the market that way. So that is our first check, which is brilliant. So we are looking at this now thinking, oh, this is interesting. We might be able to get into this for a buy. Okay, so every single one of these candles represents 15 minutes of time because we're on the 15-minute chart. And if you can see this little counter here counting down, this tells you how much longer you've got until your next candle is due to change. So you can kind of see how much further you've got left on the candles. We've got 12 minutes left on this candle yet. At the moment, these two lines down here are really close together. They're sticking together. So at the moment, they're quite happy just to be right under there and nobody's taking control of anything. Okay, they're sitting there quite happily. So this, at the moment, could snake along here for a little while yet. Okay, we need these to break away, and we need the buyers, the greens, to start to break away from the red and to take this back into the purple zone for us to be interested in a buy there. Okay, so that's our stochastic. Now, the candles are incredibly important, and it's the shape of the candle that we are interested in this strategy. When a candle has got a flat top and it's a red one, that means that this trend is now pulling down. It's pulling down. If you imagine a flat top with a flat hand pushing the market down, it's pushing it down. It's brilliant. It's coming right down. If a candle looks like this, and you've got a body and you've got a wick at the top and a wick at the bottom, that is an indecision candle, because it's not got a flat top or it hasn't got a flat bottom. It's got wicks either side, and it's called a doji candle. You've got one here, here, here. And as you can see, these doji candles correspond to consolidation, where the trade doesn't know what to do. Okay, so if you went to kind of push down on a doji candle, you'd get spiked. It's not a good place to be. You do not want to be pushing down or pushing up on a doji because of that spike. Okay, that's called a wick. 2 seconds, guys. My little daughter is calling me because she's gone to the toilet and she needs assistance, right? I'm so sorry, right? Talk among yourselves for a minute.
How's everyone's day going today so far?
Hello. Oh, I'm so sorry. I got a booty call. Is that what they call a booty call? Right, okay. Anyway, candles. Right. So, doji candles, ones with the spikes, are bad. Okay. We don't like to trade on doji candles. We like nice, flat, topped candles for a sell, and flat bottom candles like this one for a buy. As you can see, doji means consolidation. We don't like those. Okay. So, as you can see, this one at the moment, we are looking for this candle now. For us to get into a buy on this trade, we need a green candle to start forming, and it needs to have a flat bottom like this for it to take the trend back up again, back up here. Okay, and that would be our buy. Right. So that's candles and stochastic. Right, as I said, this strategy is very simple. All I've got on there at the moment is one indicator, which is this one. Okay. So we're going to put something else on here just to confirm our trade. Now, the next thing we're going to put on is the PSAR, and it's called the parabolic stop and reverse. So we go up to our indicators. It's in my favorites. Oh my God. I don't know if you can hear that. The ceiling's going to come through. Right, parabolic SARs. There we go. Parabolic SAR. Now, as you can see, what it's done is it's dropped these dots onto my chart. These are PSARs, okay? So what these do is they follow the trend of the candle as it comes down. So if it's coming down, they're on top of the candles. If the trade is coming up, they are underneath the candles. Now, this is what they do. This is why they're incredibly clever. When they come underneath the candles for a buy, when they stop and reverse to go on top, they're going to start bringing this trade down. So we've got it here. Look, they came, they're on top of the candles, they stopped, they reversed, they bought our trade up for a buy. But look, they've stopped, they've reversed, and they're bringing this trade back down for a sell. So for us to get into this for a buy, we need this PSAR to stop, reverse, and bring it back up. Excuse me 1 minute, my children are about to kill each other.
Kill the children.
Okay, so parabolic stop and reverses. So for us to get into this trade for a buy, we need these PSARs to reverse underneath on this chart. And then that way we've got three things lined up. We have got our stochastic in the extreme. We'll have a high Kanashi candle, which is going to be green and coming up, and we would have had a PSAR flip. But at the moment, as you can see from this chart, this trade is not ready. It's not got all three things lined up. So we would then really execute our patience and we would wait for those three things to line up. Let me just check the chat. Make sure there's nothing too major going on. Just see it flash up and it disappeared again. Chat, there we go. Make sure everyone's okay. I am multitasking, Matt. I'm so sorry. This is tantrum and trading, you know what I mean? I'm just trying to do what I can around the children, and they are getting bored today because it's raining. So, right, anyway, thank you for your patience, everybody, with this. I really do appreciate that. Okay, so.
Sarah?
Yes.
I've got a quick question for you.
Okay.
Is there any advantage from starting on the 15-minute as opposed to starting on the 5-minute?
It gives me more time to analyse it. Some people, it's no advantage from trading on the 5-minute. You can trade off the 5-minute, but the 5-minute moves are going to be smaller than the 15-minute moves. So it's likely to change much more quickly on the 5-minute chart. So as you can see, if you drop down a time frame, if you want to get in and scalp quickly, if you drop down a time frame so that every one of these candles is then a 5-minute move, as you can see, things are lining up a lot better on the 5-minute. It's getting ready, okay? So as you can see on the 5-minute, we have drill, okay? We have screaming children, and we also have a stochastic that is turning up for a buy. As you can see, it was in the extreme. This is what we want to see on our 15-minute chart. The blue is crossed over and it's coming back in here. We've got a PSAR flip and we've got a flat bottomed candle. So if you were going to trade off the 5-minute chart, this would be the moment you would get in. Now, be aware these are 5-minute moves, right? This candle was just flipped for the 5-minute move. Okay, we've just had a flat bottomed movement. But as we know, and if you've been watching these for a while, this candle could come back down and then go back up, and then that would not be a flat bottom anymore, right? That would then be not valid anymore. We've still got 4 minutes left of that candle. Now, this is where it depends on what sort of trader you are. If you're quite, if you've got balls of steel and you want to get into it now, you could literally press buy and go for 5 pips on this one, on the 5-minute, right? Because at the moment, you know, let's just get in. That's your little ruler. This little ruler will be your best friend. That's where the price is now. So for 5-minute, for a 5-pip move, I would only go for 5 pips on a 5-minute as well. I won't go for anything more because it's likely to turn again. So you could easily get in for 5 pips on this one if you were going on that. But if you're going on the 50-minute chart, if you can see, like, our candle's starting to go green, but that's a doji, it's undecided. But if you drop down, you can see that it's setting up for a buy on the 15-minute. This is where it comes down to the sort of trading that you want to do. If you want to be super fast and get in and scalp, then use the 5-minute charts and do exactly the same setup. If all your 3 things are lined up and set up, you can get into these trades. Now, this one looks very appealing because what we do look at is support and resistance as well. It's where the candles like to cling to, where they like to go the most. And you can draw your own support and resistance lines in. So if we drew a line, say around there, as you can see, these candles have really respected this line. They keep bouncing off of it. So that would tell me that this candle wants to return up there to that line. And also that would line up with your stochastic as well. So if you were to get into that one on a 5-minute, there's a potentially 15-pip move there. So if you want to go for it, right? But I'm just trading off the 15-minute charts at the moment. But I know this is what the boys are doing. And they're having brilliant success with it because they are literally going in and looking at the 5-minute, and they're also dropping down to the 3-minute. So as you can see on the 3-minute, they would have probably got in on this PSAR flip and this bottom candle here. So on the 3-minute, if they'd have got in on that candle, they would have got their 5 pips. they would have done it. Okay, that, and you only need 10 pips a day or 3% account growth, so however you want to look at that. But look, on the 3 minute, these stochastic lines are nearly back up here again, which tells me that that is going to go to about there where there's a little bit of support resistance, and then maybe do a retrace. So on these smaller time frames, you've got to be quick. You've got to see that flip with your own eyes very quickly. You've got to press buy, you've got to get it for 5 pips, and you've got to get out, right, as quick as you can. And you've got to watch that. But with the 15 minute, it does give you more time to make sure this is right. And then when this does flip, you have then got possible 21 pips all the way up there. But then you've got more certainty that this is going to move, because look, this is still down here in the stochastic, right? So this could keep going sideways for quite a while. So I would wait on this one. Now, if you didn't want to wait and you didn't want to stare at charts, we do have the Ninjacator, which is a brilliant tool, which has been developed by our Ninja team. I think Kevin done this, which is amazing. And you can drop a Ninjacator on this. And what the Ninjacator does, I'm going to use the old style one, is it takes away you having to look for the stochastic, you having to look for the PSARs. The Ninjacator does it all for you, okay? It takes away those 3 things that you're looking out for, okay? You don't need them. The Ninjacator has taken all of those things into account in one indicator. So what it's done is it's looking at your PSARs, it's looking at your stochastics, and it's all thrown into one indicator. And this will tell you when all 3 things line up. So here you've got a BYOB down, so you would get in there. Here you've got a BYOB up, so you'd get in there. And you can use the Ninjacator in a very effective way. If you haven't got a lot of time and you haven't got time to go and look at the stochastic, look at the PSARs, look at the candle, then you can literally go onto the BYOB and put the Ninjacator on it and just wait for the BYOB up or BYOB down. So look, this one is now setting up beautifully. So I'm going to get rid of that, because even though the Ninjacator is excellent and I recommend everybody use it, I want you to be able to do this without that lazy tool. It's a lazy tool. It makes you lazy. Right. So let's just listen to the drill for a little bit longer, and then we'll pop some more bits on here. Right. So we'll put our old stuff on. Right. So 15 minute Euro JPY. Oh my God. Right.
You sure that was the drill?
Well, I'm not sure anymore. I'm not sure what's going on upstairs now. It's not me, I'll tell you that now.
Sounds like my stomach.
This just goes to show you that you can trade no matter what your circumstances are. It's not a problem. So if you wanted to put the Ninjacator on this and just walk away, you could, or you could just set your own alerts on TraderView, which is excellent. Now, I'm keeping an eye on this one, because if this flips, then I'd be interested in getting into this, okay, for 5 to 10 pips. Okay, so that might flip while we're live on air, which would be great. I don't even know what he's doing. Oh, I do know what he's doing. He's putting some more guttering on. That's it. Because we're flooding, right? Anyway. Now, there's something very serious I want to talk to you about. So I'm going to come off this screen share because I'm going to talk to you seriously, right? There's one thing I've noticed that people are saying on these sessions and doing on these sessions that it worries me, right? And that is, and I saw it on the boys session last night, and I know Paul says it, is that they are being their own stop loss, right? They are watching, and then if a trade goes the wrong way, they're just getting out, which is great. But whenever I enter a trade, I physically put the stop loss in at that point. Now, the reason I've done this is from an experience that I had where I was trading with a large lot size and I was watching my trades and I was being my own stop loss. Now, the trade went the wrong way. I tried to go in and press exit trade, stop trade, come out of the trade, however you want to look at it. I tried to close that trade. My MetaTrader 4 had crashed. I couldn't stop it, right? And the other thing that happens is if your internet connection goes down and you cannot stop the trade that you are in, there's no point in being your own stop loss if the technology is not working. So please, just as a precautionary measure, if you start to trade with big lot sizes, if you're only going for 5 pips on a trade and you're going for 3% growth, that can be a big chunk, right? If you haven't physically put a stop loss in and you are watching it, what would happen if your internet dropped? What would happen if your MetaTrader 4 or your C Trader or anything like that went down? Because it has happened, okay? You can't stop that trade. You can't, no matter what you do, you haven't got the technology to stop it. So please, if you are being your own stop loss, please bear in mind technical issues that could happen. I mean, it could be a 1 in a million chance that it could not work, you know, when you try and stop it. But I have learned from experience, and I have learned from that happening to me where it went the wrong way and I couldn't stop that trade and I lost a lot of money. So please, I always say to people, please put stop losses in, okay? It's very important. There, my little rant over. Right, okay, screen share again. I just want to protect you all, guys. I want you to trade safely and I don't want you to lose money, okay? So please just be aware of that. And especially if you're busy or something happens like your children need their butt wiped or something like that and you forget and you can't put this, you know, then at least you've already got your stop loss in and you've set that level to somewhere where you're not prepared to let it go past. So I'm just going to check the chat. Oh, look, this is going to flip. Right, we flipped. So if anybody wants to get into Euro JPY now, then, you know, this is gone 10 minutes into this candle already. We've had a flip. I would say go for it. But, right, yeah, Dean, just be aware of it, mate, because honestly, it happened to me. And that's the only reason I'm saying it, because it happened to me and I lost a lot of money. So just always, please have that backup stop loss on there when you enter a trade. So Euro JPY. So if we're looking at this now for a trade, I would expect this trade to come back up to this support resistance level line. There's a line about there, which coordinates with these ones here. So this could come up to here. So you could be looking at 12 pips. So you could probably get your 10 out of this, but I'd go for 5 on this one, just because I'm chicken and I'm on live. So there we go, Euro JPY. So that would be your perfect BYOB setup. Now, can you all see why that's so perfect? We've waited to the 15-minute chart. We've had a stochastic in the extreme. The buyers have taken back control of the stochastic. Can you see the green line that's crossed over the red line? We've had a SAR flip and we've got a beautiful flat bottomed candle. Okay, and then that one should come back up to the line of support up here. So you've got room to get your 5 to 10 pips on this one. But yeah, and then what I would do is your stop loss, put underneath your PSAR. Where your PSAR flipped, you put your stop loss under there, or you just go for a 1-to-1 risk to reward. If you're going for 10, put a 10 pip stop loss in. If you're going for 5, put a 5 pip stop loss in. Okay, don't go for anything more than that. It's not worth it, okay? Because, you know, and don't ever move your stop loss. If you've put a stop loss in, right, and a level, and you think, oh, give it a bit more wriggle room, it's going the wrong way, let me just keep moving my stop loss down, moving it down, believe me, it will never turn, right? So be committed to your stop loss. Be prepared to put in a stop loss that you are prepared to lose. You know, if that's going to lose and that's going to hit that stop loss, be happy with that limit. And if you're not happy with that, then take your lot size down a little bit. So this is a good Euro JPY. I should have got in this and I could have monitored it, shouldn't I? But I'm multitasking, so that's the only thing, though. The live traders, Paul does it all the time. He'll be on trading, talking about a trade and going, oh, this one's really good, and everyone's got in it, and me and Paul haven't got in it. We didn't take it. So that's a good one, right?
You know, you're saying don't move your stop loss. Can you move your take profit?
Well, if you've got yourself a trading plan and you're going for, say, 5 pips a day, 10 pips a day, have that as your take profit, okay? And literally, if you want to stay in it longer, say you've got your 10 pips on that trade, say it hit 10 pips and you think to yourself, well, I could go for more here. This could be good. I could get some more pips. What I tend to do at that stage, when you've got your target for the day, that's the time where you can move your stop loss in front of your entry point. So let me just show you what I mean. Say we got into this trade on this aqua line. So that was our price. We entered this trade, yeah? And let's just say our trade is now in profit because the price is there. So the trade now is for 3.8 pips in profit from where we got in, right? Let's just say your target for this trade was 10 pips, all right? So we got in at 890, 9, 9. Oh, right. Just going to remove that support resistance to confuse you. Right, so we got into this trade. We pressed buy on this line here. This here is our 10 pip target, right? When our trade is in profit, as it is on this particular example, and your stop loss originally, let's just say you put your stop loss here, okay? Because that was what you were told to do. If you're in profit, you can move your stop loss to above your entry. So even if this trade turned around and came the wrong way, it would stop at that red line, still giving you, say, 1 pip profit. Okay, you would be in what's called a risk-free trade if your trade started to go into profit and you moved your stop loss ahead of where you got in. Because if this turned and hit the stop loss, you got in down here, you're still in profit. You can't lose on this trade.
That's genius.
Right? So that's what we call risk-free. So as soon as you're in profit, move your stop loss so you can't lose. But if you want to go for more pips, then what I tend to do, let's just say you put in a lot size of 0.10 on this trade. When you got to when you got to this take profit level, you can close 0.9% of your lot size and lock it in. That's yours. That's safe. That's yours. As they used to say in the 80s, that's yours. That's safe, right? You're not taking that. You leave that last 0.1 running risk-free because you've moved to stop loss. And you can ride that as high as you want to go, because even if that turn came back down, you can't lose, right? So you can lock in profit just by closing out a proportion of your lot size while you're in a trade. Now, it takes a bit of practice to do that because you have to kind of work it out. But the wonderful thing about our Ninja team is that we have created something called the Exit Manager, which is a tool that you can put onto your MetaTrader 4, and you can set that up before you trade to lock in profit, to move your stop loss to break even. All these things that I'm telling you, you can set that up beforehand. So once you're in the trade, the actual Exit Manager manages that trade for you. It's called managing your trade. So it will move your stop loss to break even. It will move your take profit. It will lock you in profit, and you kind of set that up the way that you want to trade. And there's a brilliant video in our Ninja team explaining all about the Exit Manager and how that works. And I know a lot of people use that if they can't manage their trades. If they want to just set it up and walk away, but they want to sort of move their stop loss to break even, all that sort of stuff, they can use the Exit Manager on that, or you can physically just sit there and do it yourself, all right? But I didn't want to confuse too much with stuff, but there is all these options out there. There's all these things available for us as a team to make trading and managing your trades easier. So how are we doing on this trade? Does anybody get into this Euro JPY one? Anyone got in? No?
It's in a bit of drawdown for me right now.
Oh, is it? Okay.
Drawdown.
Yeah,
Drawdown. No, that's not good.
That's been the way for me this morning. Everything's gone into drawdown and then it drops back up to profit.
Really? Is it one of those days? Oh, I haven't traded today, actually. This is the first time I've opened my charts all day. So I haven't really seen what's been going on. But as you can see from our stochastic, we've got a nice, strong stochastic buy coming up now. So this will take a little while, but I think this will at least get you 5. It's kind of pulled back a little bit. But if we flip over to the normal candles, you can see what that's doing. So it's pulled back a little bit, okay, but it should. But then that's the fear there. Look, so you can see there's a line of support resistance on the normal candles here. Has that just touched it, ready to drop again? We don't know, but you can drop down a time frame and have a look, see what it's doing. See, it's starting to pull back a little bit, but this could just be a little pullback before it carries on up. But if you drop down to the 5-minute, they're in the extreme. So this extreme tells me that this is going to pull back a little bit before it carries on. All right, so just be aware of a little bit of a pullback on this one. But on the 15-minute, it's pulling back a bit, but I think that's going to be okay. So let's keep an eye on that one. All right, so what I tend to do, if I'm keeping an eye on a trade as well, down the side here, if you highlight one you're looking at, it will remind you to go and have another look at that one in a minute, okay? So that's what I tend to do, and I can just kind of go through and look at these as they go. Right. Let me just go back to chat. Oh, it's disappeared again. Chat. Yeah, so Rick's been placing exit manager on his trades as well. And basically when it's in profit, he can move his stop loss to break even and just snag extra pips, or it's brilliant. The exit manager is something you put onto MT4, yes.
Okay.
You can't put it onto TradingView. It's not a TradingView thing. It's an MT4. It's actually on your trading platform. So you can
And is that only on your laptop?
Yeah,
or...
you can't do it off your phone. That has to be put on your laptop. And for the exit manager to run, if you're in a trade, you need your internet signal to be permanently running. If your internet signal was going to drop, then the exit manager could drop, which means obviously it's not working. So that's why I don't tend to use things like exit manager, because my internet's not very stable, and I don't trust my internet enough to trust my trade to be managed by the exit manager. I prefer to physically look at it and move my stop loss and, you know, lock in profits. Right. But when you're only going for like 5-10 pips a day, you know, you don't really tend to need the exit manager so much, because you can physically watch those. You're not really into big trades at that point. So it's very good.
With that there, like for me with the exit manager, the only reason I run it right now with my BYOBs is because I pay more attention to the zooms that are going on than what's going on in the markets. So for me, it's just something in the background. If you're watching the charts themselves straight, then I don't use the exit manager for it. I just watch the trade direct.
Yeah.
Just throwing that out there for some of the people, like for the other trading ideas, it's really good for. But for this here, it's just because I don't have my full attention to the charts.
Yeah. That's it. It takes that, you know, it manages it for you. You know, it's a helpful tool. It manages your trades for you, and it's a brilliant, really, really good piece of kit. So we love it. Lots of people use it. Loads of the live traders are using it as well. Lots of people use it, but I'm a simple girl. Well, I shouldn't say that, should I? I like simplicity. I'm not simple. I like simplicity, and I like to be able to just physically go in and have a look. So that is your BYOB in a nutshell. Let me just have a look. See if there's anything else we want to quickly look at. What's coming? The last one came in 15 minutes ago, and that was a 5 minutes. So that was a GP ord. Let's have a look. GP ord. Right, so we'd look at this one. So GP ord. Is the stochastic in the extreme? Yes, it is. I've got to change my candles back over. Hi, Kanashi. Well, it's snaking along the bottom here. Is it in the extreme? It's kind of come out of the extreme a little bit. It's snaking a little bit. The P-star hasn't flipped, and we've not yet got a flat-bottomed candle for a buy. So if we jump down a time frame, on the 5 minute chart though, if you're a 5 minute scalper, the stochastic is starting to turn up. We now have a flat-bottomed candle. We are just waiting for a P-star flip on this one. So you can keep an eye on this one as well. Let's just check the overall trend on this one. So this trade has been in a sell position for quite a long time. It's kind of reached quite a low. We go right back. It's really low. Look, it's not been this low for a long time. So that would worry me, because we would be trading against a trend which is very much on a downward trend at the moment. There's not a lot here to tell me that this is going to turn. This could keep going down for a long time. And it's Great British Pound, and it's very volatile at the moment. Just have a look on the hour. You can just check. See, this is still, look how long this has been going down for. You could probably get your pips on a retrace, but I don't know. It worries me that this is so strong. This has been going down so strongly for such a long time. So I wouldn't look at that. So you can always go back to the different time frames and just check to see what the trade's been doing. Oh, disappeared now. Oh my goodness me. Where's it gone? There it is. It's got stuck. Come on, come over. Computer's trapped. No, it's crashed. Come on, come back. Come back. Oh. Right. So yeah, well, maybe worth keeping an eye on. You might be able to get a few pips on a retrace on this one, but sometimes, and one of the things it says about on here as well, on your checklist is, how do you feel about this trade? Now, as you get more experience and you start to trade different pairs, you will start, oh, look, we've had a flip on the 5 minute on that one. You will start to get a feel for pairs, and you'll start to think, well, do I like this setup? Do I like the way this looks? And you will start to have like this instinct of regards to whether you like the trade or not. So GP ORD, it might flip on the 50 minute, you never know. If you wanted to go on the 5 minute for a little scalp, possible. Look, we've had a PSAR flip, we've got a flat bottomed candle, but I don't know where this would go to. There's so many resistance lines. There's one there, there's one there, there's one there. I don't know if it's got enough in it to go back up, to go up for a decent amount of pips. Also, another tool that I learned this week, if you're not sure about where your support and resistance lines are, is there is an indicator called Auto Support by JMC. And what this does is it puts your support and resistance lines on for you. Can you see where it's put these red and blue lines on? The blue lines are your support, your floor. The red lines are your ceilings. Okay, so this is like, look how many times it's bounced off this twice now on the 5 minute. And it's caused a flip. So that's a good way to look at where you think this could go. So if you looked at this red line, they're saying there's a line of support there. So at the moment, the current price is there. So if you measured up to that line of support, there's a possible 27 pips up to that line. So that could be a buy to for 27 pips back up to that line if this carries on going up. 15 minutes. If we get the flip on the 15 minute of this one, I'd be interested. 51 pips up to that support line. Okay, so at the moment it's in stochastics in the extreme, but I wouldn't trade that after 5 minutes just because I'm not used to doing 5 minutes. It's too fast for me. And I feel that when they're 15 minute ones, they're a little bit more certain. So I would put that one on my watch list. So I'm going to tick that, highlight that to go back and have a little look. All right, so let's put the indicator on it as well, just to have a little look. Don't think I'll get another indicator on this. It's maxed out. Right. Put an indicator on it and have a look, see what that says. At the moment, it's still very much BYOB down. But one to look out for, if the BYOB up comes in and we get a SAR flip and we get a flat bottom candle, then this would be a nice buy because that looks like he wants to go back up to that line. Now, if you don't want to sit and look at this, you can set an alert. If you go up to where it's got an indicator up here and see where it's got these 3 dots, if you click on there and you can add alert to Ninjacator. If you click on that, so the condition is that the Ninjacator gives us a BYOB up alert once, notify on an email, notify on the app, play a sound. You can change the sound. It plays for 10 seconds. And you could say, it's going to tell you what pair it is anyway, but Great British Pound, old BYOB, buy. Okay, and you can create an alert. Now, what that would do is you can go off, make a cup of tea, do whatever you need to do. And if you hear that siren go off on your computer, you can come back and say, right, is the conditions all still met? Can I get into this now for a buy? And that would alert you to when that's ready to go. That is another really good thing about the Ninjacator as well, is that you can set that alert on there so that it will tell you when to get back in it or not. It's brilliant. So let's see how EuroJPY is doing. Ooh, it's going up still. Is anybody in profit on that one yet?
No, not yet. But
No, really?
No, minus.
-2, but it's climbing.
Really? Okay, well, that looks like he wants to come up to this line, so he should be okay.
Not
Minus
worried.
1 point.
Should be all right. This indicator has got this line going through the middle, though, which is your MA, and that's not gone blue yet, which worries me a little bit. If you were looking at the indicator, but we're not supposed to be looking at that. We're supposed to be just looking at the basic chart. So, but we've had 2 SAR flips now on this one, and it's heading for this direct. It's heading up here. So I would say just take 5 on that one, guys. If you get up to 5, or obviously close whenever you're happy with a bit of profit on that one. But that one is heading up to this support level, which is brilliant. So if you ever want to look at your support levels and where you think these are going to, drop your auto support on, just, you know, just have a little look where they're going. But other than that, just stick to your basics. All right, stochastic. So the stochastic's nice and strong at the moment, which is good. So let's look. -3 at the moment, Henry. Okay, cool. It should be fine. I think it's going to be okay. I think. We never know with trading, do we? But the probabilities are all there for a good setup there. So it's all good. Right, I'm coming up to my hour. Now, is anybody else on today? Let me look at my... what we got? Tuesday today. So I think David was on this morning, was he? If not, then he'll be on at 4. Sharon was on. So I've got Les tonight at 7 o'clock. And we've also got the Baby Boomer Power Hour at 2 a.m. UK time, but they're in Australia and Canada. So that's 9 p.m. Eastern time tonight as well. And they are brilliant. And they'll be going through BYOB and 25 for life as well. So I hope everybody gets a few pips out of that one. And thank you for jumping on. Has anyone got any questions before I go? Anything you're not sure of you want me to go over? No, all good. Right.
No, just wondering how much gaffer tape you used for the kids.
I sent my husband up there to sort them out, so they're probably terrified now. They were going a bit crazy. It's all this rain. It's just not good. I haven't had any fresh air today. But thank you for bearing with me, guys, with all the stuff that was going on around here today. And I hope that helped you clear up a few things about the BYOB. And, you know, I'm just trying to keep it as simple as I can for you. It's a great little strategy, and just practice on demo until you're winning majority of the time before you switch over to live. But please remember what I said about stop losses, okay? Just look after your accounts, okay? There's no harm in, you know, you learn to say, okay, I'll, you know, if I get stopped out, I'll get stopped out, but put a stop loss in where you're prepared to, you know, accept that, okay? Just make sure you put them in, because I don't want anybody to try to stop a trade and they can't. All right, so make sure you always look after your trades, okay, and they'll look after you. Right, thanks everybody. I'll be back on tomorrow at 3 as well, so we'll go over some more stuff then as well. If there's anything in particular you want me to go over, then let me know well in advance. Thanks everybody, appreciate you being there and supporting us all for these live trading sessions, and I will.
-7.
All right, we'll see you soon. Thanks everyone.
Thank you, Sarah.
Thank you. Thanks, Sarah. Bye.
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 Cheers.
We're getting up all